Hi everyone, thank you for joining us here today. Before I run through our presentation, I think I'll start with the fact that I've been with Plateau for about 7 weeks, and I became an investor first, and I think that's important to understand because what I saw here as I peeled back the layers of the onion was two very strong projects that were a little bit misunderstood, I think, in the marketplace. This company was founded as a uranium company about 10 years ago in Peru. And over that period of 10 years, advanced a project to a PEA stage, and then Fukushima happened, and it was the dark days of uranium for years. About 9-10 months ago, the company made a lithium discovery that's very significant on the same project package, completely separate project from the uranium project. And if you look at us today, we never participated in that frothy lithium run. We had a discovery, we took it to resource in 9 months, and we've got a uranium project, and if you look at the uranium market, there's telltale signs that things are starting to turn. There's mines coming offline, there's production curtailments, there's new players buying in the physical market, and we've got contracts rolling off soon, and we'll see term prices starting to be set in the next 6-8 months. And our lithium project, it's large and it's getting bigger, and we're moving that to a development study by the end of H1 next year. So we've got a lot of catalysts on the horizon. So just some quick highlights. We'll talk about the management team and board in a second, but we're in Peru. If you look at Juliaca as a city, we fly in there, about an hour-and-a-half flight from Lima, multiple flights a day, and we're 3.5 hours on a 2-lane paved highway to site. Our project's about 20 minutes off of that 2-lane paved highway. The Sangaban hydroelectric power plant has capacity, has surplus capacity. It's the largest hydroelectric power dam in the country. It's about 40 kilometers as the crow flies from our project. And if you look on the right side of that highway that you get to our project with, there's a high voltage transmission line that runs along the ridge of the mountain range. There's plenty of water in the area, and we've got 2 ports readily accessible. Port of Ilo, as an example, is about 400 kilometers away. So infrastructure-wise, we're very well situated. We've got a large land package that came together actually over a period of 10 years. Our COO, my business partner, Lawrence Stefan, a founder of the company, we've consistently been there for the last 10 years, and that's really important because as the risk capital market for juniors evaporated and it was a tough number of years, we stayed there continuously, and we managed to do, through 5 M&A transactions, pick up and pull our land package together into over 900 square kilometers today. Infrastructure we've talked about in Peru is a mining jurisdiction. Mining is part of the culture there. This is a fantastic place to work. So in terms of our project specifically, so we'll start with the Falchani Lithium project, and that's to the southwest, highlighted in the darker green area with the yellow outline. This was the discovery November last year to first resource end of July, and we continue to drill. Our uranium project is the founding basis for the company, and that was taken to a PEA, and that was announced in 2015. Nobody cared about uranium. But like I said, people are starting to take notice of what's happening in the space. We've had physical funds raise a couple $100 million in the space. We've seen companies like Uranium Energy Corp go out to raise 10, have a book of 50, and raise 20. All U.S. and international investors buying into that deal. So it's a very interesting dynamic that's starting to take shape there. Our uranium project's at PEA stage, and we're looking to also, through some low capital spend, update that project and continue to move it forward. And there's just an image of our total land package. Corporate overview, roughly 80 million Canadian, 85 million Canadian market cap, trading about $1.10 to $1.15. We have some reasonable volume. We're also traded on the OTC, and we have a Frankfurt listing, but the TSX Venture Exchange is our primary listing vehicle. Myself, my background, started off in investment banking, but for 10 years, but more importantly, I spent 5 years with a group called Oxygen Capital, where we incubated companies, and we built about 4 companies in 5 years. Most recent claim to fame, if you will, was a company called True Gold Mining, and we took a project from an open pit heap leach gold mine from a PEA to gold production in 3.5 years in a gold market that came down 30%, and the junior market was just dead. So I think that really speaks to team, and what we have here is a team that's certainly Lawrence and I balance each other off in terms of our skill sets. Lawrence Stefan, in Peru for 18 years, a geologist by background, comes from big companies, Anglo, Goldfields, JCI. and as one of the original founders that brought the first component of the claim block together that ultimately now forms our uranium project, and then over through 5 M&A transactions brought us to our land package today. Ted O'Connor's previous CEO, he's a director today, and he's a technical advisor to us. He's got a uranium background. He's 20 years with Cameco, project evaluations. And then our board, Ian Stalker, Wayne Dreyer, Alan Ferry, Maurice, and Christian. And then we've recently got 2 research reports out in the last 5-6 weeks from Haywood Securities and 8 Capital. And really what that is a telltale sign that we're evolving as a company. This hasn't been broadly institutionally marketed. I came off of about 30 meetings the last 3 days. Lawrence and I had 15 meetings yesterday, and we've got a full card today. So we're starting that process of building broader market awareness as we advance our projects. So focusing on our lithium project first, as mentioned, from discovery to first resource was 9 months, and we're at about 2.4 million tons of lithium carbonate equivalent today. I'm going to move forward a slide, and then we'll come back to this slide, because I want to help you visualize what this looks like. This is not a clay project. This is not a brine project. It's not a spodumene project. It's considered a hard rock project. We're already in the top 10 of the world globally. And it's this pink zone is our lithium-rich unit. And the first discovery hole punched through into this unit, and to be honest, we didn't know what we had. And when we got the results back and triple-checked them from 3 different assay labs, they told us we had a high-grade lithium discovery. And the best way to think of this, it's kind of like a coal seam in the sense that it's fairly continuous. It's flat-lying. It's up to 150 meters thick, and on average 75 to 85 meters thick. That's the size of a decent-sized New York downtown building. So it outcrops in some areas, and what we found is this unit continues from our Falchani east, which is our light blue, dark blue outline where our current resource is. There's a valley, and then on the left-hand side you'll see 3 drill holes kind of in an arc shape, and that's what we call Falchani West. And we found that lithium tough unit at surface and outcropping on the eastern flank of Falchani West. And so now we're in the process of drilling that off, and our drill program that runs from now until the end of December will focus on following up on the surface sampling we did. The surface sampling is very similar results to what we found in the east, and our grid drill pattern will be roughly the same dimensions of Falchani East. And we'll be looking for a resource update end of February, early March next year. So, in short, growth is not the limiting factor here. What we now need to do is on our metallurgical work is we did some work last year that showed we could produce a battery-grade lithium carbonate product, 99.74%. We did that with Ansto Labs out of Australia, which is well known for their lithium background. Half of the lithium market is supplied by hard rock mines in Australia. And what we need to do now is our next step, and we just announced this yesterday, is we're taking 4 parallel processing paths or routes, if you will. They're all conventional routes that are used in lithium projects today around the world, and we're applying them to our specific project. And we have an R&D lab in Lima that allows us to do a whole suite of R&D work, level work, different process routes, size fractions, leaching, etc., to arrive at what we think is a possible process route that we then hand off to Ansto and they continue with their work. So their work will continue over the next 4 months, and we'll have our lead engineer run trade-off studies iteratively as they do that so that we come to a commercial solution and then a PEA end of H1. Our Macusani uranium project, so the founding project for the company. 2015 was the last PEA that was done. It was done at $50 a pound uranium. The analyst consensus is about 52 today. The spot market's 27, up 30% in the last 3 months. And we're seeing production curtailment and new players in the market, and utilities needing security of supply. So we've got a $600 million US MPV based on that $50 a pound, very rapid payback and a 40% after-tax IRR. 6 million pounds for 10 years. In the project area, because this was a consolidation of a series of land packages, we have a number of other areas and targets to go look at. And we'll be advancing this to an updated PEA on some slightly modified processing approaches to see if we can extract better value. Community is very important. I think I have 2 seconds left. We've been in the area for 10 years, and so I think the most important part about that is we've worked there continuously as others have pulled out, and that's helped us build up that trust with the communities we work with, our host communities. Very quickly, our roadmaps, we come from a lithium resource in 9 months. We did the preliminary met work at ANSTO Labs. Exploration's ongoing. The drill's turned to the end of the year. We're looking for a resource update end of February on lithium and a PEA end of H1, and you'll see iterative news releases on met work results as we proceed through the year. And then on a uranium project, we'll take those kind of low capital intensity, what we think are going to be high ROI pieces of work program, and run them to ground, and then update our PEA. And then we'll be at the end of the first half of next year, and we'll be looking at fast-track approaches to move both projects through the next levels of de-risking. That's all I have.